So for this week's trades of the week, we're going to be going through a number of the longer term charts, the daily charts. Of course, if you're looking for short term action, we generally recommend looking at the trades of the day videos that we update on our website and also onto YouTube. But if you're looking for some of those longer term opportunities, for those of you perhaps who really don't have a lot of time to trade, maybe looking at the markets maybe once or twice a day, just want to drop in, have a look at the charts, have a look at a few opportunities for trades over a number of weeks, then or days and weeks, then these are really the best trades for you to be looking at. I'm going to start off with really looking at the dollar CAD. Not been a lot of opportunities really since last week, but one of the trades that certainly did come through last week was dollar CAD, and this is a trade that I mentioned through last week to trend signal users, really with a view to looking out for that key resistance level that was set in there. If I just have a look at the chart, and you can see that 105.65 level, the dotted red line moving to the right. We hit that level and rejected it in the middle part of August, and really been on watch ever since then, waiting for that rotation back down. Only really expecting prices to go down to that 103.26. We've just fallen just shy of that level today, but certainly led to quite an interesting move there. So rejecting that resistance zone here, indicators then turning from green to red, giving us that opportunity to trade. Classic swing trade off resistance at around that sort of 105.10 area, and really falling a good 150 points plus there to now. A nice move on dollar CAD, certainly called in the workshops for trend signal users, but of course trend signal users should have been able to get onto this trade in any case. Moving through to some of those other markets, sterling yen has been a fantastic mover over the last week or so, really ripping higher over the last sort of week to 10 days. But let's have a look at that further. I mean, this is a trade that actually triggered as a buy back on the 20th of June. This is a classic example of set and forget. We talk about this a lot in our videos of the best ways in which to manage trades are often not to manage them. In other words, how the market gets to my target, it's almost irrelevant really. What matters is that the market does get to my target. So here's an opportunity. End of this bar here, we've got that sniper circle, indicator turning from red to green here. I'm going to put a stop loss below here, and I'm put my target zone up to the top. Market's hit that level today. It's a bit of a wobbly line, I'm afraid, but it's just hit that target there into the 90s, the 157.90s, from original entry at about 150.90. So that's a profit of over 700 points on that move. But of course, it's taken a little while to get there, isn't it? It's taken, what, a couple of months to get there? It's taken a few zigzags, up, down, up, down, up, down. But you know what? It doesn't matter. The fact of the matter is, there's your stop loss. There's your target. It's hit your target before it's hit your stop loss. How it gets there doesn't matter. Let's detach ourselves away from the emotional baggage of trading, where we feel like we have to exit trades early just so we get our heart rate down a little bit. The fact is that this trade has gone to our target zone. It's rallied in line with a strong uptrending market, and it's a beautiful trade of 700 points profit there on sterling yen. Sounds like a lot, doesn't it? But of course, you may only trade it at 50p a point. That's still 350 quid there on sterling yen. A great move. Moving through to away from currencies, let's have a look at a couple of the commodities and a couple of the indices. Again, decent moves taking place, and let's start off with gold. Gold's been really sort of ripping down a bit over the last sort of week to 10 days. Obviously that very strong move over in July and August there, and then met with that sniper then on the 2nd of September. Very much sideways action throughout the early part of last week, and actually some very choppy, very violent days really, very big candlesticks, a good 200 points each of these candlesticks here. But ultimately the market is moving nicely in our direction. So from a short from 1391, the market's now at 1364. So that's a move of what, 270 points or so from our original entry point. Very much a short in line with the current downtrend we're experiencing on the longer term charts on the gold. And of course, very much highlighted by that sniper circle there. A nice move. Wide stops required to trade gold, but certainly a very, very nice move indeed there. And of course, if you're able to trade from 10p, 20p a point, very easy to get on trades like this. And there's a number of brokers that allow you to trade like that without having to risk a lot of money on these trades. So moving through to silver, similar picture as one might expect. Short there from 23.50, give or take. Now the market down about 60 points in our favour, and that's fine. It's not exactly setting the world alight, but it is certainly going in the right direction after a shaky first few days. Looking back through previously, you can see again, like gold, that silver having a massive move higher, and then here we are. The next time we move into overbought territory, we're then having that other opportunity to sell from the 30th of August, gathering a little bit of speed this week. So nice moves really on the commodity markets as well. Oil certainly hitting some pretty decent resistance levels as well. But the final couple of charts, just so I don't want this video to be too long, is just look at the indices. Frustratingly, no sniper on the FTSE, but certainly giving us that buy swing trade in line with the uptrend there. So what do we look for? I'm going to refer to the monthly chart. See the green line here, my green vector average? Forget everything else, just look at this line here. It's green. It tells me we've got an uptrend on the FTSE. So moving through to the daily, I then have that buy. Vector average from red to green, trend signal from red to green. There's a buy there at 64.60. It's now 65.80, 120 points or so, moving up very, very nicely indeed. But the real eye-grabbing indices there, the Dow, textbook buy there. Even over the non-farm payroll volatility, we remained in the trade. The stop was far enough away so we didn't get stopped out, entering at 14943. So profit at the moment of about 220 points or so on side on the Dow. And then also as I move finally through to the S&Ps, biggest index in the world really, 1656.1. It's now 1681, so that's up about 250 points as well. So really nice moves on these equity markets, highlighted very powerfully by those snipers, and able to pick up some pretty decent moves. So all in all, a very good week for the daily charts. It's been a little bit quiet over the last few weeks. In August, not so many opportunities to get into many trades on the dailies, but certainly some good opportunities on those major indices and also those major commodities as well. And really nice to see us locking in some profits over what's been a very long-term buy on sterling yen. But we set, we forget, we let the trade run. We've got our risk managed. We've got our stop in place. It's just a question of letting that trade run out. So a nice week, and hopefully we'll have a lot more to show you again next week. Thanks for listening.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.